Let's see if there's any media assets for Christmas. No, nothing for Christmas. So much stuff. Hey, CJ Yukon. CJ Yukon. Is Yukon what I think it is, or do you have to have CJ with it? I just found out my nephew, it, he's applying there and a bunch of places. Like he's got in with scholarships at I don't know, Colgate, Xavier. Uh, my sister told me all the places. It's like a half dozen places. It's great. So let's try to do some work this evening. First thing I want to tell you guys, and I'll put it right at the front, but I should have written it. Should have written it before I started. There. Um, 86.90. I'm sold. Yeah, right. Right. I can't believe he's ready to go to college this fall. And he's a good kid. He's a handsome guy. And he's, to me, he's about 4 or 5 years old, but he's a young adult. Anyway, here's my email. Farrandbalanced@gmail. Farrandbalanced@gmail. Um, I don't know exactly what I'm going to do as we go into the new year, and I'm not making any pronouncements. Maybe everything will be the same, or maybe it won't. But I've been giving serious consideration to just ending my YouTube, but I don't want to leave anybody hanging. So that's how you contact me. I'm not making that. I'm not saying that's what I'm going to do for sure, but I can't do this anymore. I have to go make money. And so I got to figure out how to structure things. And I don't have the answer yet. I don't have the answer. So I'm not going to make a pronouncement because there might be a way to who knows? There might be a way. That's one thing I wanted to tell you. Um, I really I am very close to just not doing YouTube at all any longer. Uh, my intention has been to give you guys an idea. Railtown, which I do due diligence. Tony will have you believe that I'm just some sort of YouTube promoter or something, and he came out hard against Railtown before he did any due diligence. But you guys don't remember that. So I don't buy that he's on your side, but of course you should feel whatever way you want to feel. So it's going to end up being this personal thing, and then that means don't listen to William because he doesn't like Tony and all that. And then it's like all my advice is useless. It's a typical gambit, and I don't want to fall into that. I don't know Tony personally. I think he's an opportunist, and I do believe he works with the shorts. But if he doesn't, a lot of that message that's out there that you're getting, which he mirrors, that's what you got to get away from. And if you don't want to get away from it, I don't want to do this anymore. I just don't want to do it anymore. I don't want to fight that argument. There's many of you who are intelligent, honest, and you'll say, well, Railtown is trading at the price it should be trading. That is completely, either I'm not understanding you, or it's just you don't deserve. You're a trader. You shouldn't be looking at Railtown as an investment. I mean, one way to look at it is the way the markets are set up, where there are computer programs selling stock down all day long. That's the path of least resistance. If you're saying, well, in a world that's corrupt and there's computer programs selling that this is where it should be, well, again, that's trading. That's trading. But I really don't want to argue it anymore. It's boring to me. I already understand it. There's not much more to learn. And we've run out of time. We have run out of time. To argue about that stuff is a luxury. Either you want to change your financial situation or account, or you don't. But if you don't see that there's algorithmic, high frequency trading, always selling, always destruction, just ask yourself, who always wants a lower price when they sell? Who? A normal market? A normal seller? You know Railtown. You know that it's closely held stock. Nobody's selling. Yet some of you can tell me the stock's trading where it should be. It's it makes my brain hurt. And I don't have much of a brain to hurt. You guys are all smarter than I am. Then others are mad at me because they called the stock, they had intuition when it was 45 cents, 44 cents. And now they've blacked me out because they got it. The stock's down. And they heard from a whale that the AIP people were great, and the Railtown people don't know what they're doing, and they believe it. Oh, fine. Go ahead. Go ahead. That particular whale has access to the exact same information, if not better, than I do. So follow that advice. But I don't want to fight it anymore. I don't want to fight it anymore. He's great. He's great. Listen to him. Others, like Tony, are patting themselves on the back that I told you, and finally the stock's in a buy. I showed it to you the other day. Finally, the stock's in a buying range. Well, okay. I never said this was a 6-month run. I never said our race ends the end of December. I never said, if you go back and listen, people wanted predictions. I gave predictions. All of my predictions were wrong. But on the other hand, the AIP deal never closed, and TELUS came in, and TELUS is even bigger. I'd rather be wrong in my projections and have this massiveness come in than not. But hey, I didn't pick it. Tony picks it. He's congratulating himself. Hey, I guess he called it. I don't remember his prediction that it would be under 30 cents by the end of the year, but he must have called it because he's smart and I'm not. He also, when I first came on, accused me, as I just said, of being, some sort of shill or some sort of promoter, and he trashed it without even knowing the story. Now he talks to the CEO, and I'll tell you something. To me, that's a huge red flag for owning Railtown. If the advisors at Railtown and the CEO of Railtown are talking to Tony De Janeiro, it's a huge red flag. Huge red flag. But I'm going to give up on that as well. If you want trading advice on Railtown, go to Tony. If you want somebody's advice who cares about you, go to Tony. If you want somebody that gets information directly from the CEO of Railtown, go to Tony. Tony's the best, I'm telling you. He's able to ask him, where did he come up with the idea of Railtown? Where did he hear of it first? But hey, you want to be with a guy like Tony. He'll be there for the long run. But I just don't want to fight it anymore. So I may, a couple of my subscriptions here are going to run out, and I may have no choice but to go down for a while on my YouTube. But you see my email, so you can reach me. I don't want to fight with idiots anymore, and I don't have the time to argue basics. My view is the markets are corrupt. I think Railtown is completely mispriced. I don't agree with people that tell me that the stock is where it should be. I remember a time when stocks traded differently. But if your argument is because the markets are corrupt, this is where it should be, well, then that gets into all this philosophical argument that I leave it to you. You can have it. But if you want up-to-date information and honest reaction after chats with the CEO, please tune in to Tony. He's on Twitter, and I highly recommend that you follow him. There's a guy named Patience Plays. He gets the information on Railtown in far more detail than I do, and you can follow him. He's extremely conservative, and his targets are much more, in my judgment, I'm not speaking for him, much more, in my judgment, as a trade. I don't view Railtown as a trade. I don't view Railtown as a way to beat one of Frank Benedetto's stocks or Ham stocks or Tony stocks. What are Tony stocks? I saw that AME's down at $1.50 and GME's $20. I guess he's made a lot of money for you talking about those stocks. Always before the roaring kitty comes in. I don't know, guys. If you want to stay in this sewer, stay. I don't care anymore. I don't make money on my YouTube channel. I'd like to start making money in other ways, which I'll talk about now, and maybe some of us can do it together. But I'm just not interested in it. I've treated you all with the respect as if, and that's what I believe. I don't think it's not true, that you have intelligence, you have critical thinking, that you're serious investors. You may, in many cases, not be accredited, but I've treated you as accredited investors. I talk to you as one Wall Street person would talk to another. And then I get this pedantic response that somehow the implication is I'm not doing my due diligence and Tony will stick with his due diligence. I'm telling you guys, if you want a sign that Railtown is not a serious company, the fact that the CEO would spend an hour and a half with Tony is a pretty good sign Railtown's not a serious company. Just put that in the back of your head. Be aware of it. I choose to believe that someone gave the CEO bad advice. And, you could probably say the same about me. Why would the CEO talk to a YouTuber? And that's why I don't want to do this anymore. I took my job on Wall Street seriously. I built my career. I moved to London, and we built a small, in retrospect, it'd be called a VC or private equity firm. My associates there didn't want to set up a fund. Bless his heart, he just didn't want to wear a suit. But man, had we done so, that was back before hedge funds really, there were some, but not the proliferation in family offices. But I've always taken it seriously. I've always worked hard. And I've always stayed away from worthless waste of times like Tony De Niro. And if the company's going to spend time with Tony, I'll walk away from the company. That's just a fact. But there's those of you going to say, wow, he makes so much sense. It's easy to put out some posts after the stock is down and highlight risks. I assume you already know the risks. Do I have to talk to you like your children? I mentioned the risks. And then he like all shorts, like all bashers, he pulls out part of what I say, $55, as if that's loco. Guys, if you want to listen to them, you're not going to get the benefit of owning Railtown. You're not. You'll be out. You'll be out as soon as it's $1 or $3. He'll pat himself on the back and he'll give you GMC all over again. But I don't care anymore. If that's what you want to do, go there. And if you really believe that the stock is where it should be, I don't know what you're doing in the market. You're going to get a hot trade from Ham, get a hot trade from Frank Benedetto, and you're going to make it. Guys, that time is over. The time is over. So anyway, enough on that. I really mean it, though. I may stop doing this at any time. It may not be my choice. All of this might get shut down until I come up with a way to get it going again. But it also might just be that I do something else. I've worn myself out on this, and I think I'm doing good. And then the markets just put their heaviness, their weight of destruction on everything, and nobody listens to me. I guess it's because I'm a Looney Tune. But for a CEO to talk to the shorts, it's insane. Well, he's not a short. Okay, maybe he's not. His message is the same one as the shorts. What the shorts want you to do, they want you to diversify so they can take your money. They want you to stay in these over-the-counter stocks, which is a disaster. You should not be in over-the-counter stocks. They want you constantly emotional. They want you to be a day trader as if you ever could be a day trader. You can't be. Unless you spend 6-7 hours a day in front of a computer, sometimes more than that. You're not that. But they want you to think that they want your money hot, 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 hot. They can take it from you. All of the computers they have on both sides, sometimes they can, guys out of Puerto Rico can send $5 million to a trader, a trading desk in the Cayman Islands or the Bahamas, and they can work with Univest or one of those companies and give them $2 or $3 million. They'll turn on the machines. Algorithm. Beep, beep, bing, boom, boom. Talking to the cell machines. Bleep, bloop, 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 bloop. And they recognize each other. They need you. That's why they call the charm boys, to pump up the stock. They try to get some money flowing, get it unpredictable. They love it up and down, doesn't matter. That's where they want you. But if you want to stay there, you think you're getting information that's going to benefit you, stay there. I don't care anymore. I really don't care anymore. This is my email. Now, sometimes stocks end up trading under $1, end up in pennies, and maybe, just maybe, they can escape it. What the shorts and guys like Tony want you to think is that Railtown is just like any of these other stocks. It's like any of these other opportunities. Diversify. And anybody could see, according, patting on him on his back, finally the stock is in a buying range. Well, where was he when it was 60 cents? He told us he was long then. But then the other thing he says to you, it's down whatever percent from the high. But he doesn't say that from the high. He just says it's down that much. Guys, his message is the same as the shorts. I think he works with the shorts. Maybe he doesn't, but it doesn't matter. I don't care. I'm sure he's a great guy. Next time I'm in Texas or wherever the hell he is, I'll go have a drink with him. He's fascinating. Fascinating guy. But I've already now, because I've come out strongly against him, I've already made it personal. So that's going to mean that any advice on Railtown, oh, that's just William being personal. So it's useless. I'm in a box. I'm totally in a box. And so I commend to you, follow Tony. When I first came out with the emphasis on Railtown, he ridiculed it. And then his due diligence consisted of telling you that he looks at filings as if I don't. And he found the ongoing concern clause as if it's not in every bloody stock filing. Because he wanted you shaken and nervous. And I guess he just wants you for his one brilliant idea, GMC. In terms of the stock price being where it should be, that just shocks me for professionals to have that attitude or that idea. But hey, that's what makes markets. To be clear where I stand, I have a different opinion. My opinion is there's no buying in Railtown. None. Oh, but we've been buying. I don't think our buying matters, except for the guys and girls up in Canada. But down here, I don't think it matters. I think do you understand algorithmic computerized trading, program selling? Whenever we buy, they just turn on the Xerox machine, the mimeograph, they just forge another swath of certificates and give it to you, which is quasi-legal. Quasi. Because of Bill Clinton. We can't beat this. I'm not going to be able to fight it. CEOs have phone calls with Tony the Tiger. How do you beat it? It's surreal. It is surreal. So anyway, let's move off of that aspect of it. And let's just talk about the price quickly of Railtown. I've been wrong in my projections for the year, but I also thought that there would be the catalyst of the closing. Look, frankly, a lot of the information I was hearing was wrong. I'm not going to blame anybody, but it was wrong. As I look back on it after my own conversation, that I took very seriously, it wasn't a chat. I took my 2 hours with the CEO of Railtown extremely seriously. I have a notebook full of notes, and I got some of your questions answered. I didn't ask all of them because it had to end. He cut me off. He said, I got to go. 2 hours is a long time. But I think the AIP is extraordinarily important to Railtown. But I think the TELUS deal is what's held everything up. I think it's what's held up research. I think it's what's held up revenue. I think it's what's held up marketing. I think it's what's held up telling the story of Railtown. And I think the TELUS deal brought us to the end of the year. I did not mince words when I told you how frustrated I was with how long the AIP deal closing. I believe that was the reason that took so long was AIP's run by a college professor. That's fine. He's very smart, very talented, but it's not like he had a huge staff around. Many want to blame Corey for that. I give Corey a pass because although I don't know, I don't pretend to be friends with Corey. I guess if you want friendship with Corey, go to Tony. He has chats with him. Tony, hey, another CEO, had a chat. I That's the first time I've ever talked to Corey, and maybe I will or won't again. I hope I do. I hope I do. I thought it was great. But my thinking about it these days, I think TELUS is the big deal, not AIP. AIP is critical and worth it. And in fact, I think the revenue that Railtown generates in its co-revenue share with TELUS because of the transfer of the network of companies annual spend, they're already spending it. They're going to move it to TELUS. I think it'll pay back the entirety of the cost of that acquisition. I don't know, half a year. Once it gets up and running, half a year, pay back. And then it goes forever and ever and ever for our terms, from our point of view. So it's an important one. But I think the real message of Railtown, which I'm not sure anyone I was talking to understood, at least before recently, is TELUS. And with TELUS, you have one data center in Canada ready to go using electricity and power at half the price of any other data center, hooked up to NVIDIA's best already. They're bought, installed, they're in the racks. And the data center was built and completed, I don't know, 5 or 6 months ago in the summer. So I found an article, but I'm sure it's been run through its paces and it's ready to go. That's the story of Railtown. Nothing else. Nothing else. And this hogwash that you should put it in a diversified portfolio and plan on 2 years, and it's speculative. Of course it's speculative. NVIDIA is speculative. I just don't want to fight it anymore. And I would prefer, when the new year comes, I'd prefer to turn off my channel and just focus on whatever my life is, because I just can't tell you what a waste of time it is. Dealing with the Borough Park boys, dealing with these short sellers, it is a complete waste of time, energy, and brain power. The banks control our government. The banks control the regulators. The banks control attorneys. And the banks and their hedge funds, some, if not all, use this process to suck money out of America and bring it to the very, very top. It will end. It's not going to end as a policy choice. There's not a single president that will change it. And if we decide to still be in there fighting, it's insane. It's literally a point of insanity. Are you trying to punish yourself? Was there something you did wrong? Decisions you made that you regret, so you have to keep banging your head against a wall? Stop listening. Stop listening to Ham. Stop listening to Frank Benedetto. Stop listening to Dan Borders. Stop listening to Tony Tiger. Stop listening to any of these people. That's my advice. But if you want to listen to them, the best guy probably to listen to is Ham. Get in early. When he call, if you're the first 20, 30 phone calls he makes, buy it right away. Who knows? It might go up later the day. But buy it. Be prepared to wait 3 months, 6 months. But if he's calling, he's going to make 400 phone calls. Then it'll be 2,000 phone calls. And he'll pump it. By definition, I'm not saying that's that word with all sorts of meanings. But his calls will make it go up. And just sell on the way up. And if that's what you want to do with your life, do it. But if you try to trade a squeeze, you try to listen to Tony tell you you're gonna that GMC is going to be the mother of all squeezes and you got to get in it, you're helping the system suck the marrow out of your own bones. Stop it. Just stop it. Just get away from it. So anyway, we're left with Railtown. I believe we're left with Railtown. And for a long time, the AIP deal was going to close and then research was going to come and this and that and that. Well, none of that materialized. You can blame it on Corey or me. Fine. But I think that's just that the AIP deal was run by people that had never dealt with anything like that before, listening to attorneys, regulators, who the hell knows. But the good thing is it's all over with. Tony told you that a week ago. The AIP deal is done. Thank God for Tony. And his due diligence. He likes his due diligence. You should like it because he likes it. So we don't have to wait for that anymore. But it really seems like, as I process the information I received, that the real holdup, yes, AIP took forever, but the real holdup was TELUS. And it still is a holdup. It still is a holdup. But you know what's good about it? I think in the new year, it's going to change. At the risk of being wrong again, I think that the TELUS data centers have had enough time to run the NVIDIA and the power and the whatever they have. I don't know if they have a large language model, but maybe they're running model. I don't even have the vocabulary, but it's been run through its paces. Now, have they run Railtown through it to test Railtown? I think that's a little more of an open question. But if we can just, for the sake of argument, make a guess that the the data centers were tested for NVIDIA and power and water and et cetera over the last 6 months, roughly, and they finished it by the end of the year. Maybe they test Railtown in January, but they may have already tested Railtown. Who the hell knows? That's the conductor, the rail engine, rail tracks. Maybe they need to test a large language model, or maybe they already have. Who knows? We don't know. That's the information that's holding up, I think, the buyers. But I have to believe they've either tested the large language models and Railtown by now, or they're going to do so presently. And how long does it take? How long does it take? Again, I don't completely know, but it can't be more than a month. Probably isn't more than a week. So then what happens? Then what happens? Well, TELUS announces to Canada and the world, our sovereign AI data center is open for business. And who do they announce it to first? Canadians. Who do they announce it to first? Their own customers. Who do they announce it to first? Developers. Do they make it a campaign? Is it television? Is it in person? Is it at hockey matches and curling matches during halftime of a curling match? Yeah, they're going to do a campaign. I've shown it to you. The CEO wants to grow AI related revenue from 800 million to 2 billion for 2028. So it's 2 years, 3 years. Yeah, so there's your big change. Your big change is not that Railtown is out telling Railtown's story, not that research is out telling Railtown's story, although I think those things will happen, both those things will happen. TELUS will be out presenting the story. I would guess that starts in the new year, and maybe as soon as next week. Not next week, the following week. So it's really exciting what's ahead for Railtown, but I'm wrong, as you know. I've been wrong. Tony set the race up as a year-end race from June. Apparently he called it correctly. Definitely I was wrong in all my projections. I have freely admitted that. So I wouldn't listen to me. I'd listen to Tony. The thing I caution you, Tony's going to take kudos at $3, $5, $7, and he's going to have another idea for you. I would resist that. If I'm still talking to you, I'll tell you as we go. If I'm not, try to resist that. Try to use your own critical thinking. Because anything that's going to make a $50 million market cap worth $500 million or $1 billion or $2 billion in market cap has the potential to make it worth 10 billion, 15 billion, 20 billion. So don't get emoted out early. That's my opinion, for what it's worth. Railtown has had constant selling I think from the time they put out the AIP deal with the MOU, the LOI. I'm not going to bore you with that again, but it's been in the United States as much as 50 to 60 million shares, which have been sold under the reg show exemption. Now, many of that could have been done as compared to buying them back in the dark intraday. So maybe some of it settled at the end of the day. Maybe a lot of it was arbitrage against Canadian stock prices or the Canadian dollar. We just don't know. But we do know reasonably well, based on Tom Ronk's work, which I don't think everyone follows as if it's uh, uh, Encyclopedia Britannica. But his indication, 50 to 60 million shares in the United States sold under the reg show exemption. They don't exist. They weren't borrowed. That is a lot of supply. And if there's more in Canada or more in the dark pools, there's a lot more supply. That has to misrepresent the price discovery in the stock. Oh, it's where it should be. Yeah, it's where it should be. Oh, yeah. Then there's no buying. The banks up in Canada, almost all of the banks up in Canada, and the bigger institutions, either if they knew the story, they had to sign an NDA, or they're just precluded from buying. And of course, the thing comes, well, if it's so great, someone would be cheating and buying. Well, I don't know. In Canada, as a general rule, it used to be anyway, they don't lock their doors and they don't have a lot of guns in their apartments. Down here, we do. I don't know. Maybe they follow the rules better up in Canada. I don't know. But the major buyers, the banks and the institutions and the research arms, have been precluded from telling the story and have not bought, not recommended it all year. So you've got excess selling of stock that doesn't exist and no buying. The price is wrong. But many of you will say, yeah, the price is where it should be. Yeah. Oh, yeah, it's where it should be. I don't know what you're smoking, but that's just my opinion. So let's go through what it could be worth. Let's look at some of the comps. Let's look at AI. Two other areas I'd like to talk about tonight, if I'm not too tired. As we come around this corner into the new year, Wall Street and mutual funds and family offices are going to buy gold. They're going to buy silver. Everybody's going to be talking about silver. Everybody is going to be talking about it. I haven't talked about it for the last 6 months because I chose to focus on Railtown. The information I thought I was interpreting correctly led me to believe that's where the urgency was. I still believe that. I think you're going to see, and we'll talk about Railtown, but I stand by my $55 prediction, whether it's Canadian or US. But you got to understand that high up, you know, I mean, if the bloody thing went to 18, it would be great. So, it's a target. You got to have a reason to buy something, I believe. Um, But what's coming as we go around this new year, there's going to be a lot of money going into AI and AI crap, but also the precious metals and the miners. I'm not as sure about oil and gas because unless we go to war, it's 50-50, but which is a great opportunity to build positions. But I think private equity is already there. Private equity is going to come into the lower. It always cascades down from the top tier miners, second tier, third tier, fourth, fifth, sixth tier. Basically, they start with the miners that are producing and come down to the juniors, and then the more um, uh, the the companies with a story. A lot of them won't work either. But there's going to be a lot of money flowing. You're going to see ETFs in the precious metals move. You're going to see mutual funds. Your brokers are going to, well, wealth advisors are going to be, it's going to be on all the headlines. And, I think silver will be $100, $125. It's too bad. A year ago it was $25. Perfect pairing with investments back then, but when you have to wait for money to come, you miss out. The overall market, as you know, I've been projecting for a long time. I raised my targets, which, who am I? But I think the S&P will go to 10,000. The Dow to 70,000 now. NASDAQ 40,000. Russell, could Russell go to 5,000? I don't know. That seems to be pushing it. But they're all going to blow up. They're all going to go so high. And hopefully we have 6 months, 9 months of that, a year of it, because in that time frame, maybe Railtown gets bought out. But when this is over, I really believe, and we could be wrong, this might be the one time the markets don't correct. But when it's over, there won't be anybody alive that remembers the last time it happened. Or there'll be very few people alive that remember the last time it happened. So it's going to change your lives, and it's going to change my life. I'm not ready for it. I used to be. I bought a house near the White House. I intentionally bought a property inside of DC and with the metro and mass transit and walking distance to everything. I spent a lot of time getting to know my neighbors and being friends, making friends and learning my neighborhood. But I'm no longer in that. I don't have those protections anymore. And what's coming could be so severe that your very physical safety is at risk. So I want to talk about what would cause this big correction in the market. It's not going to come because there's no reason. It's because we've turned everything into a ping pong ball. They're even talking about now, I think it was in Barron's, but it might have been one of the other news. I don't know, Barron's or one of them. But it might have been International Business Daily, but you can bet on anything now. You can spend money online on elections or on trends. Well, what's the difference between the modern markets? It's all betting. It's because everything's been hypothecated and rehypothecated, and everything's been both over collateralized, but the system is under collateralized because it's all stacked on top of itself. And while the handful of men up there trade back and forth and glean their commission off of it and their fees and make themselves wealthy beyond belief, the risk is put to the economy and to people and to taxpayers. When it comes down, everything's going to crash. Everything. But I think some things won't fall so far. Gold, silver, um, and believe it or not, I think AI. I don't know about the multiples in AI. And remember, AI talks about a whole range of things. But the revenue from data centers, I don't know. It's still going to exist. It's still going to exist. So I think and that's a term David Hunter uses, he calls it a global bust. I think it's the beginning of a depression or a recession. I don't know that it's going to be, you're going to be able to live through it. But all of a sudden, people are going to be out of jobs. People aren't going to have a lot of extra money. Real estate likely will collapse. Car prices, credit cards, banks. It's not going to be pleasant. So one of the things I want to suggest to you as you come into the new year, why don't you sell crap you don't need, whether it's financial crap, businesses, uh, a second home, crap out of your garage or basement. Just sell it while people are still buying, because it's possible a year from now, 2 years from now, you won't be able to sell all that stuff. And when you sell it, I I would say my first place to go would be, if Railtown's still cheap, I like that. But otherwise, it would be silver. But silver's catching up. I think that easy trade is probably over with. I still think silver, it might go to 150, so it could double. But man, the easy decision uh, part of that trade has disappeared. Uh, so anyway, I think the markets are going to go up next year a lot, and we're going to have to get ready for a time when the banks are just in the stratosphere. We buy puts against them. When some of these other stocks, you buy puts against them, there will be a leadership change. I don't think the Dow or the S&P or NASDAQ will come back to their previous highs, but they'll come back up. They'll change what's in the Dow. So the Dow will start going back up, but it's going to be a 5, 15, 25-year change. And it'd be a great opportunity to build a company, which is what I really want to think about doing, maybe with some of you guys, or I'm just going to do it by myself. I don't know if I should have more than one company, just one, or an exchange or a fund, or like a Berkshire Hathaway, find an oil and gas company and then have cash flow and do deals through it. But that's what I'd like to spend my time doing. This back and forth with complete idiots like Tony DeNiro. And I have to tell you, he attacked me first and hard. So he's hiding behind, well, he called me stupid. Well, I think it's fair enough. I do call him stupid. But at least as far as investing advice is concerned. I don't know him personally, but it's just a waste of time. Guys, I don't have any more time for that. I got involved in all this because I bought into Ham's basic pitch, but I've since found out that's been Ham's pitch for 10 years, and I'm sure 10 years from now it'll be Ham's pitch. That somehow you get into a stock that's shorts and it's going to squeeze. Bless his heart. I just don't think that's going to happen anymore. But in any event, I think we're going to run out of time to play those games. If the market goes up to, let's pick one of these indices. If the S&P does indeed go to 10,000, it's not that far from here. And it takes the next 3 months or 5 months. When it comes down, I think the S&P could go to 1,500 in the crash. The Dow at 70,000 in the next 3, 4, 5, 6, 7 months, whatever. If it all comes crashing down, I don't think it would stop at 3,500. Now, it doesn't mean it's going to stay down there. And then you're going to have the Fed and everybody, governments, the U.S. military. And don't think we're not in Venezuela and we've allowed the genocide in Gaza Strip, and we're bombing now in Syria and Nigeria. This is all for collateral. We want regime change so our banks can go in and lend money to the new leaders who are captured by us. The liens are put against the nation's wealth, and that wealth enters in to the Western banking system as collateral. And it all goes to Larry Black or Larry Fink or, Blink or Stink. That's what it's all about. And they'll get the markets righted, and they'll start getting that going again. And there'll be leadership change. But anyway, let's go. I want to show you some things about AI and the comparables, and less me giving you a opinion piece. Again, if for some reason I just don't come on for a long time, you can reach me at Farrand Balanced. And if you give me your phone number, I'll call you back. If you're a short, or I think you're a short, I probably won't call you back. All right, so let me show you. The thing about Railtown is it's really simple now. You don't have to understand anything other than revenue. You don't have to understand anything. You don't really have to understand AI, as I don't. You don't have to understand what an agentic agent is, or a large language model, or a terabyte, or a Whippet or whatever the hell. All you have to understand is there's a lot of data centers out there, and there's a lot of data centers being built. And they're all chasing this quantum leap in computational power, which is provided by NVIDIA right now. Others will come, but pretty much it's the NVIDIA chip. Others are racing to catch up. And the sheer size of data centers, it's limited by power, which is why I think natural gas is a great thing to get involved in. But, you know, it may be that I just have to do it as a letter writer because I can't find investors that will act quickly enough. Or I haven't been able to. Maybe I will. A data center simply is kind of a commodity. You know, it's priced as a commodity. The data center they call it compute, is the basis of everything. And that they one advantage up at Who's Your Mooski, Canada, is the cost is half of any other data center. They have twice the capacity apparently as necessary in NVIDIA chips. It's state of the art and ready to go, and it's sovereign to Canada. That's kind of your memory. That's kind of your storage of knowledge. That's all the data. It's your computer. And then this is inside of the data center, but the next level is he gave me three names. The only one I remember is Cohere, but your large language models are on top of all this computer power. You have a large language model that makes all the connections to information. I don't really know what large language models do, but you need one. I forget the other one he said, Agenic or something, and maybe OpenAI, but I do remember Cohere. So something like that, they have to sign up. So this is TELUS. TELUS has to engage somebody to do the large language models. And on the top of TELUS is Railtown. That's the AI software development kit, ADK. They need that. Not only do they need it, they chose it. Not only did they choose it, as far as I can tell, it's the only one. We'll find out, but it's the only one at the TELUS data center. Now, what are the risks? Of course, the risks are execution. I mean, if the Railtown ADK fell on its face, well, that wouldn't be good, but I don't think that's the case. They've been working on it for 6 years, soup to nuts. So then what happens? TELUS has already stated they intend to grow this revenue to $2 billion by 2028. And they can do all of that in the Who's Your Mooski data center. All of it. $2 billion by 2028. We know the AIP revenue, let's just call it 100 million, but it'll probably grow to 200 million. I think it'll grow to 200 million. I think it'll grow to 250. Let's say 250. And I'll leave out any other sources. But by 2028, you could have revenue going through the TELUS data center of over $2 billion when you combine TELUS's own clients with the AIP revenue. And if you don't like that number, use a smaller one. But remember, this is over the next 2 to 3 years. I don't think it's unbelievable. So then the question is, what's the revenue sharing agreement between the critical piece of Railtown, which helps attract everybody, and whoever the LLM is, and what's the revenue split? I don't know. I don't think it's 10%. I'm pretty sure it's not 50%. But I don't know, maybe 15%? Could be more. But if it's 15% of that, that's over 300 million in revenue coming to Railtown annually by that year. So the question is, what is the discount rate? What do they discount it? It's hard to know because it depends on how big is the pie, how rapidly are the revenues growing, and what percentage of the pie can they get. But let me give you a suggestion. If Railtown becomes the critical piece, and it already is, at the TELUS Who's Your Mooski data center, and it works brilliantly, which I expect it will. And there's risks of, will AI actually do what it's promised to do? Will all of that? But you know what? For our purposes, they're all racing to get into it. And that's what matters for now. And I don't think 2 years is your time frame. I think 2 quarters might be your time frame. But projections are projections. I mean, there's no guarantee. But at 300 million, do you give it 100x as your discount, or you bring it back? You say, well, deals have been done at 100x now, but why don't we measure this one at 35x or 30x or 25x, because it's going to take 18 months to get to that level. On the other hand, once it's up and running, it's going to last forever in human terms. So I don't know, you got 300 million in 2028 estimated ARV. I really don't know what do you use a 50x? Do you use I don't think you use 10x. You use 20x, 30x, 50, 70. I don't know. We'll find out. But I guess just to pick one, we'll use 25x. And you can always do these numbers yourself. 300 million in 2028 revenue times 25. That's an estimate. And you don't have to wait till then to get these prices. So that's 7.5 billion, possibly, enterprise value. We know there's 222 million shares outstanding. So it gives you a target of 33.78 per share. It's not hard. Now, Tony will make fun of that because he doesn't give any critical thought. He's just giving you bumper stickers. It doesn't mean this will happen, but I use 25x. If you use 50x, you get a much higher number, $66. If you use 12.5x, you get a lower number. So you can cut this, you can divide it by 3, give you $12 target. But I think in 2028, that's a possible number. And you just have to have it estimated. And you know the number of shares. Anyway, that's one way to come up with a target for yourself. Now, you may find, and that was something that I picked up on, I think, I'm reading tea leaves, but I think if Microsoft came and offered $5 a share, they might sell to Microsoft. So, some of that upside might have to come through the vehicle of Microsoft or through the vehicle of TELUS, whoever the buyer is. But anyway, we'll learn more about as we go about all that as we go. But remember that number is based on what who is your Mooski data center. It proves the concept. Railtown will be on the lips of every investment bank in the world. Who's not going to want that golden standard as the critical piece between the user and the computing power and the large language model? They're going to want Railtown. Now, yes, there's Google there. There's LangChain there. And by the way, there's a dozen others. But the market, as the CEO told me, compare it to the automobile market. You got Volkswagens, Jaguars, Fords, Pintos. I suggested looking at it like this, the stock market. There used to be room for dozens of financial institutions. Now it's about 4. But the market just grows and grows and grows. It's a huge market. So imagine if it's proven to work at TELUS, who's your Mooski data center. That's one data center. What if it goes worldwide? What if Microsoft buys them and installs it in all of Microsoft's data centers? What if TELUS buys them and does a campaign worldwide? I mean, guys and girls, you can ridicule me for my upside targets because Tony, who's reasonable and is comfortable with his due diligence and wants you to know the risks. You know the risks. Do you want me to bore you every time I talk to you with the risks? But the upside's there. Does it mean it's going to transpire? Well, it won't for you if you listen to the hot money boys who will get you out when your stock's at 3, and they'll go, wow, that's a win for retail. Come look at this other breathless story. Anyway, let's look. This is the stock price through yesterday. And if you go back to May, June, you can see that the stock made lows. And I'm sure there would be people out there when it was at the low that would say, hey, the stock's where it should be. Whatever the hell that means. You've got to have a reason why you're buying a stock. And the best place to start is, what do you think the company's worth? And of course, you've got to make some assumptions. Otherwise, just throw a dart at the board and pick any stock. But anyway, if you look in the middle of May there, and you see it was all dark and dreary, and then all of a sudden it went up, and for a couple of days it went sideways. Then it was up again, and then it broke through all the moving averages, and then of course the computers kept the pressure on, came back all the way down and tested the 20-day moving average or 50-day moving average, which is preset in the computers. And then it bounced off of that and went sideways. And then it had that huge rally that Tony measures this year's performance from. Always the extremes. And yes, look at that. If you had purchased right at 70 cents, you're way down. But most of us didn't pay 70 cents for all of our stock anyway. But look how low it came here, 25 cents. That was Brandon's friend. Put it out there to be plucked, and they plucked it. And now the stock's up. I would suggest it's going to go sideways Monday, Tuesday, Wednesday. And then when we come back to work, come back to school after the new year, I think it'll go up above the 15-day moving average, hit the 50-day moving average, maybe pull back, go sideways a bit, and then it's going to try to break through the what is that? I can't read. Is that 200-day, or I got them backwards? Yeah, I think the red one's the 200-day moving average. It'll break. So I think that yellow line is probably where the stock goes over the next week or two. But do not get me wrong. That doesn't mean it's going to stop there. And then you're going to see it go through. I don't know if it'll be January, but you're going to see it go through these highs. And you're going to be so glad to be diversified over in AME and GMC. As this thing goes up, you'll have 5% of your portfolio going up like a rocket, maybe. And you'll be nicely, make sure that not your whole account doesn't do that well, because you want to be diversified. Lord, just got to get away from this idiotic thinking. Anyway, this pattern here looks like May's pattern to me. And we'll see what happens. I don't know what I have here. Oh, that's my, I'm trying to get this stock into my account, and I haven't been able to do it. That's my proof of sending a wire. Okay, so I put this in. This was my question. What are valuations for AI developer kits? And I'll just read the Google response. Valuations for companies developing AI developer kits, that's Railtown, are experiencing a significant surge driven by high investor demand and the potential for rapid scalability. Let me tell you, Railtown is built to scale. If TELUS turns on their Who's Your Mooski data center and opens it up to their 20 million hookups, which I don't know how many of those are really enterprises, Railtown's product has the ability to go from 10 users to 10,000 users to a million users to 10 million users with no increase in cost, with no glitch. Railtown is built to scale. These companies often command a premium in valuation compared to non-AI startups, with specific examples like Sierra AI achieving a $10 billion valuation. Well, let's just quickly take a walk down Dreamland, because we know Tony would never, Tony De Niro, he'll stick with his due diligence. He's comfortable with that. This is speculative, and you should wait 2 years and make sure that you have your dollars spread across all the manure in the field, rather than the one the one rock in the middle that you can put your weight on. But let's just take 10 billion and divide it by 222 million shares and see what we come up with. $10 billion divided by 222 million shares. We'll come up with a $45 target. Well, that's unreasonable. Some YouTuber telling you it could go to $45. No, just be reasonable with Tony. He likes his due diligence. Guys, I just got to get away from it. You can tell you can tell it's driving me crazy. I don't want to be around stupid the rest of my life. So you've got AI developer kits, which are replacing software developer kits, or they're working alongside software developer kits. Software developer kits have built all the software since 1985, and it's all got to be essentially upgraded. Sierra, $10 billion. That's $45 a share for Railtown. Key valuation factors and benchmarks. The high valuations in this specific niche are primarily driven by the picks and shovels nature. Remember when they went for gold in San Francisco? The guys that sold the picks and shovels and the jeans, they made all the money. Nature of the business, providing foundational tools. That's Railtown, a foundational tool that enabled the broader AI industry. Premium multiples. AI startups, that's Railtown, although it's been around for 6 years from white paper to now. AI startups generally command much higher revenue multiples than traditional software as a service companies. An average of 37.5 times for leading private AI startups. Well, let's pick one. Let's say that Railtown gets the AIP companies to transfer 100 million over to TELUS. Maybe it's better if I sit over here so I can look at my calculator. And let's say they get a 20% piece of that. So they make 20 million. Let's ignore TELUS altogether, and we'll multiply that times 37 and a half. 750 divided by 222 million shares. That gives you a target of $3.37. That's 10x from here. 10x from here. Tony will tell you, don't listen to the YouTubers. Others will tell you the stock's priced where it should be. Guys, if you're going to make money, you have to try to see around the corner before other people do. I never promised you a rose garden. I never promised you that anybody can pick the bottom in a stock. Anybody, except for Tony the Tiger. He can do it. So you get 37 and a half. That's pretty nice multiple. Outliers in generative AI, that's Railtown, and core infrastructure see multipliers over 100x of revenue. 100x. Tony doesn't want you looking at this. And whoever's telling you that the stock's priced where it should be, you shouldn't listen to them. I mean, I don't know what to say. I really don't know what to say. I'm not going to fight it anymore. Stage-specific medians. Median pre-money valuations for AI startups, and that's my opinion. You're buying this pre-money, pre-Series A. You're buying a seed valuation, maybe a Series A. You're getting a price on this stock that's, if you're willing to take it, that VCs would be salivating over. And they will, I think. Doesn't mean I'm going to be right. There's still execution risk, but I think it's worth all the money. Median pre-money valuations for AI startups last year were higher than their non-AI peers, a trend that is expected to continue in 2025. Well, that's helpful. Seed stage, Series A, maybe that's what you're paying. Series A, 50 million. Series B, and then they talk about proprietary technology. Startups with unique proprietary technology, that's Railtown. Others will argue, well, they took so long buying AIP, shows that you can't count on them. They don't have proprietary technology, or somebody else beat them to it. Well, that's an opinion. Just make sure that your opinion's based on good information. Or valuable intellectual property are valued higher than those simply wrapping existing AI models, i.e. using OpenAI as a wrapper without significant value add. But this is Railtown, is IP. Scalability and market potential. The ability of an AI developer kit to integrate across many systems and achieve rapid market adoption. What's more rapid than being on top of a data center that's going to do $2 billion in revenue within 3 years annually? And you're getting a piece of that. It's pretty rapid adoption. And that'll drive investor interest and high valuation. Notable company examples. Sierra, the AI agent developer, which provides a software toolkit, agent SDK, for building AI agents, raised capital at $10 billion valuation in September of 2025. $10 billion. Tony would point out to you that's just a lunatic YouTuber. Guys, there's your comp. Applied Intuition, specializing in AI tools for autonomous systems, its valuation rose from $6 billion to $15 billion. That's a comp, although they're doing more revenue. But Railtown could get to that revenue number. Let's just see what 15 billion does. $67. $67. Tony would say, "Oh, that's it's crazy. There's no way. There's no way a 30-cent stock could go to 67." But follow Tony if you want mediocrity. Glean Technologies, AI search tools. Railtown isn't a search tool, but it's 7.2 billion. We could use that number. It'll be lower, but we might as well. These are comps. That gives you a $32 target. It's just comps. They're out there. Valuation methods. Valuing an AI company goes beyond traditional metrics and considers unique factors like the strength of their proprietary data. Railtown, excellent. Team expertise. Railtown, other than the fact that some of the people are old, it's excellent. And the ability to capture market share, they're already capturing Who's Your Moose up in St. Lawrence Seaway. Investors often use a mix of methods, but the market potential and growth rate are heavily prioritized over immediate revenue for early stage companies. Who's Your Moose is going to get AIP's revenues straight off. And TELUS is going to go on a campaign starting in the first quarter, one would presume. It's just sitting there. This is not a time to be reasonable. It's a time to be radical. Revenue multiples, high revenue multiples, 10x to 50x plus are common, reflecting high growth expectations. Then you have fundamental analysis. Well, you don't do that. You let Tony do his due diligence, and then you just follow his charts. All right. This is Applied Intuition. This is one of the companies of those three companies we just said. Applied Intuition experienced rapid revenue growth, reaching an estimated $415 million in annual recurring revenue in 2024. Let me just give you a number there. If in fact, by 2028 or thereabouts, TELUS is successful in putting $2 billion worth of revenue across its Who's Your Moose data center at 20% to Railtown, that's $400 million. It's $400 million. I mean, I'm making assumptions, so you can adjust it. But I'm suggesting to you, Railtown's in this league potentially. Now, maybe it takes longer, maybe it's the next data center, but it's in this league, potentially. They're aiming for $1 billion ARR. Well, if TELUS buys Railtown or if Microsoft buys Railtown and bundles it with all its data centers, Microsoft would make that number look small. So product pillars, growth comes from simulation software, data management tools, next-gen vehicle platforms, and AI applications. Railtown definitely has the end of that, maybe some of the rest of it. And this is automakers. It's all about autos. But it achieved a $15 billion valuation and raised $600 million in Series F rounds. That was Applied Intuition. This is Glean, an AI-powered enterprise search and assistance company. That's not really our field. $200 million in annual recurring revenue. And they raised $150 million at $7.2 billion valuation, $32 a share. All right, and then there's another one, but then I went here. TELUS's total revenue from AI enabling capabilities, including the Sovereign AI Factory, is projected at $800 million in 2025. This figure is expected to grow to $2 billion by 2028, so the next 2 years. It's important to note they don't have one only for the Sovereign AI facility, but let's find out. The TELUS Sovereign AI Factory, powered by NVIDIA H200 GPUs, was launched in March. Do you think they've had enough time to test it? March 2025, to provide Canadian businesses with secure in-country computing power for training AI models, ensuring data sovereignty. It has been named Canada's fastest and most powerful supercomputer. Do you think people will want to go there? I do. I do. I do. TELUS ups AI ambitions with bold new revenue target. TELUS is aiming for Canadian $2 billion in AI-enabled revenue by 2028, betting big on business-to-business growth and earning an upbeat outlook from analysts. Well, some analysts. Don't ask Tony. What's going on here? TELUS is turning up the heat on its AI strategy, aiming for Canadian $2 billion in external AI-driven revenue by 28. The Canadian telecom is sharpening its focus on artificial intelligence. lifting its AI revenue target from 800 million to a whopping 2 billion by 2028. It plans to drive this growth from units like TELUS Digital, TELUS Business Solutions, and its recently launched Sovereign AI Factory, all centered on providing advanced digital solutions for business clients. And of course, I'm assuming that entire 2 billion ends up going through the data center, but we don't know that. So, you got to adjust for that. But until we get research reports and an explanation, you know, maybe only a billion goes through. At 20%, that's 200 million a year. We don't know. We'll find out. These are things to learn. The Canadian, I already read you that. RBC Capital Markets has called this an edge. That's the AI factory for TELUS's enterprise strategy. But there's still some skepticism about how much AI can make up for ongoing declines in older wireline operations. That said, TELUS is spreading its bets. Gains in Internet of Things devices, new Internet subscriber growth, and strong demand in its health segment are all adding positive momentum. And with last quarter's results meeting expectations, Royal Bank of Canada has kept its outperform rating and a $24 price target for TELUS. Why should I care? Well, I don't know. AI ambitions ignite long-term growth hopes. TELUS's aggressive new AI target is giving investors something to look forward to, especially at a time when old-school telecom lines are losing ground. While the long-term opportunity looks promising, success will depend on how well TELUS turns those AI investments into bigger profits and protects its turf, has to protect its turf as the competition heats up. Strong third quarter numbers and steady analyst backing have left the market watching TELUS's next move with cautious optimism. The bigger picture, Canadian telecoms chase digital reinvention. So one way to interpret that, if Railtown's interface proves popular and effective, all the telecoms are going to want it. Or maybe they'll want Sequoia's product instead. We'll find out. TELUS's AI charge, TELUS's AI charge reflects a growing trend among Canadian telecoms to embrace digital transformation and business services as legacy business slows. AI, as firms put more weight behind AI, health technology, and data solutions, they are not only fueling innovation, but also building the backbone for Canada's digital future. TELUS cuts the ribbon on its sovereign AI factory. Canada's first sovereign AI factory is up and running, courtesy of TELUS, which roped in some of its, I don't know what, I cut it off. That was in September. Located in Rimouski, Quebec, on the banks of the St. Lawrence River, the facility is equipped with NVIDIA GPUs and compute infrastructure supplied by HPE, which I think is Hewlett Packard, but you guys know better than I do, and is powered by 99% renewable energy. The announcement doesn't quantify its capacity, but TELUS says it has the necessary heft to support the training, fine-tuning, and inferencing of AI models. TELUS also claims to have become the first operator in North America to join the NVIDIA Cloud Partner Network, giving enterprise customers access to the U.S. chipmaker's reference architecture and software stack, which promises to reduce AI deployment time and costs. That's what you've got. The end user wants reduced time and costs. Everybody's going to want to be here. The current strain on relations between Canada and the United States means that TELUS is keen to stress the importance of building an AI factory on Canadian soil. Today marks a defining milestone for Canada's digital futures, said TELUS CEO Darren Entwistle. Indeed, with the launch of our nation's first fully sovereign AI factory in Rimouski, we are maximizing Canadian autonomy over sensitive data. Businesses, research, and governors should not have to rely on foreign-controlled systems to advance their AI ambitions. Today, we are helping to achieve that by delivering advanced compute power within data centers built, owned, and operated by Canadians. TELUS is safeguarding our data, protecting our sovereignty, and empowering our economy, he said. TELUS has named 3 early adapters that are already putting its AI factory through its paces. So the factory is already being put through its paces. It's ready to go. Canadian Healthcare Customer Experience Specialists League plans to host a range of highly personalized AI-powered solutions at the new facility. Do they go through Railtown? That's what we'll find out. It is particularly keen to ensure that no highly sensitive patient data crosses any borders. Software provider OpenText is using the AI factory to underpin its Aviator AI platform, giving customers access to infrastructure that can crunch through reams of enterprise data without compromising on residency, security, and compliance. Does this have to go through Railtown? We'll find out. Meanwhile, Accenture will use the new site to develop, and another thing we'll find out, maybe they're already being run through Railtown. We just don't know it. Meanwhile, Accenture will use the site to develop and deploy sovereign AI solutions for customers in highly regulated sectors, including public services, healthcare, critical infrastructure, and financial services. Quote, TELUS's new sovereign AI initiative is a welcome addition to Canada's growing digital infrastructure, said Evan Solomon, Canada's Prime Minister of Artificial Intelligence and Digital Innovation. Expanding data and compute capacity here at home supports the government's vision for AI-driven productivity and competitiveness. By keeping data and compute within Canada, TELUS is contributing to responsible innovation and strengthening our broader economic objectives alongside the many other partners building critical data centers across the country. Other data centers. Now, you just wait 2 years before you invest. Indeed, incumbent Bell wants to capitalize on the Buy Canadian craze. In May, it launched its AI Fabric strategy, which aims to roll out AI factories across the country. They're not ready yet. But imagine if TELUS's deal with Railtown works and it's all in Canada and Railtown is Canadian. This is future business. Starting in British Columbia with a super cluster comprised of new that's a weird sentence, comprised of new fewer than 6 data centers. In July, it established a partnership with Toronto-based Cohere that will see Bell put its large language models to use in its AI Fabric facilities. This is Railtown. Not Cohere, not Bell, but on top of it. TELUS and Bell have their work cut out to match the might of US hyperscalers, but they might just have a chance as long as the frostiness between the United States and Canada persists. Written by Nick Wood. I don't know. Maybe that's enough for tonight. Let's see what I got here. Oh, I asked, what is Canadian data centers revenue? Canadian data centers revenue from enterprises and software developers is a significant portion of the total market. Approximately 2.63 billion USD. The Canadian data center market was valued at approximately 5 billion in 24 and expected to grow significantly. The demand is driven by widespread adoption of cloud services heavily utilized by enterprises for migrating critical applications and software developers for building and deploying applications. Future outlook. The market is expected to reach $12 billion by 2030, indicating continued strong demand from these user types. The banking, financial services, and insurance sector is forecast to have the fastest growth rate in consumption. Anyway, these are all guesstimates, and AI can be wrong. The worldwide data center market, look at this. The worldwide data center market is 418 billion. 418 billion. total market size, the global data center market is projected to grow to 691 billion by the end of the decade. Enterprise infrastructure spending is a major segment, accounting for 1/3 of the total data center capital investments this year. The demand for data services is driven by increased digitalization, cloud adoption, big data analytics, and the massive capital investment by major tech companies like Microsoft and Google into AI-enabled data centers. Hyperscaler dominance. Hyperscale data centers operated by large cloud providers are a dominant force and account for more than half of the infrastructure investments. AI impact. The rise of generative AI, that's Railtown, has significantly increased spending and demand for high-density compute power, leading to record growth in data center infrastructure spending. Co-location data centers, which allow multiple companies to use space in one facility, is also growing. This is from McKinsey & Co. The cost of compute, a $7 trillion race. $7 trillion. This was written this year. A $7 trillion race to scale data centers. AI is fueling high demand for compute power, spurring companies to invest billions of dollars in infrastructure. And of course, there's risks. Amid the AI boom, compute power is emerging as one of the decade's most critical resources. In data centers across the globe, millions of servers run 24/7 to process the foundation models and machine learning applications which underpin AI. The hardware, processors, memory, storage, and energy needed to operate these data centers are collectively known as compute power. And there is an unquenchable need for more. Our research shows that by 2030, data centers are projected to require $6.7 trillion worldwide to keep pace with the demand for compute power. Imagine, if you will, that Railtown proves its concept. Its use case hits a home run at TELUS on one data center. And they become maybe not the gold standard, but one of the gold standards in ADKs to be used on data centers worldwide. How much of the $6.7 trillion market, the revenues, and of course, I'm mixing sources of revenues here, but how much of that market do they need to have to make your investment worth a big number? Data centers equipped to handle AI processing loads are projected to require 5.2 trillion in capital expenditures. Of course, that's somewhat different than the annual spend on using the data centers. I get it, but they don't give that number here. While those powering traditional IT, it's a lower number, 1.5 trillion. What about non-AI workloads? Is that okay? I shouldn't have read that. Overall, that's nearly $7 trillion in capital outlays needed by 2030, a staggering number. To meet this demand, companies across the compute power value chain must strike a balance between deploying capital quickly and doing so prudently. To improve the odds that their data center investments will provide strong returns, companies can tackle projects in stages, measuring the ROI at each step. Still, a lack of clarity about future demand makes precise investment calculations difficult. And that's, of course, true. This is a great new frontier. The compute power value chain is complex, starting from real estate developers building the data centers to the utilities that power them. That is the advantage that this first data center in Canada has. It's essentially a cheap utility. To the semiconductor firms that produce the chips and to the cloud service hyperscalers that's the teleses that host trillions of terabytes of data. Leaders across this value chain know they must invest in compute power. To accelerate AI growth. But their challenge is formidable, deciding how much capital to allocate to which projects, all while remaining uncertain of how AI's future growth and development will affect compute power demand. Will hyperscalers continue shouldering the cost burden? Or will enterprises, governments, or financial institutions step in with new financing models? Will demand for data centers rise amid a continued surge in AI usage? Or will it fall as technological advances make AI less compute heavy? And that's an important point, but Railtown is on the side of helping making it less compute heavy. One thing is certain, the stakes are high. Over-investing in data center infrastructure, risks stranding assets, while under-investing means falling behind. We acknowledge at McKinsey that AI is a radically evolving space. And so there are risks to even McKinsey's conclusions. I'm going to save this. I'm going to stop reading this. We'll read this tomorrow or Monday or whenever I come on again. But this goes on for many more pages. But one of the keys is AI use cases. The value in AI lies at the application layer. That's where Railtown is. And let me see if any of your messages survived. No, of course. Oh, no, there's CJ Yukon. Good. CJ Yukon. Good afternoon. Hang on, Snoopy. Hang on. How are you? Hey, Fast Eddie. Hey, Diane. This here's a little ditty about Jack and Diane. CJ is my initials. Yukon is my school. Well, my nephew, I guess he's got 6. He's been accepted, and he's getting all these scholarships, and um, but he's still trying for some others. But UConn, he really liked UConn when he visited, and he liked the sports. And I don't know, he applied to Xavier, um, uh, the one in Baltimore, um, yeah, Loyola in Baltimore, um, Colgate, I think Rutgers, CJ UConn, not CJ UConn. Um, there's one up in Boston that he wants to get into. I don't know. Anyway, good kid. Steve, silver for the win. Merry Christmas to you, Steve. 8690. I'm so old. You're young. You're young. That was a bad decade for music, though. Oh my gosh. What a bad decade for music on the radio. Ugh. It's even worse now. Joe Marty, good afternoon. Just saying hi. We'll watch tomorrow. Don't let the shills get you upset. Block the losers and move on. Okay. Have a good night. Can you monetize? Yeah, I monetized them. I don't know if it interferes with your viewing enjoyment, but I don't get much out of it. It's like $100 at the most. But I might have to. I might just have to just keep doing it. Um, I may have to focus on interviews and maybe don't do lives. Anyway, if I had a better editing system, I could take my lives, move them down to 20 minutes, and maybe get more viewers. Anyway, I might have to learn how to do all that. You're right, Steve. You're right. I got to do something because I'm not living long like this. Hey, Giuseppe. Oh, that's nice, Snoopy. We come here for you, Bill, not the enemy trying to snuff out your light. That's probably right. They get close. Joe Marty. Um, Also, when you don't monetize your videos anyway, shut down the YouTube and maybe start a Zoom call a few times a week with your main. Yeah, I may do that. That's why I want to collect names and phone numbers and, just, you know. I didn't start YouTube to be a YouTuber. And I didn't start YouTube to get into pissing matches with pissheads. Um, Joe Marty, maybe just start a Zoom call a few times a week. It's a good thought. I like that. Babcock family. Joe Marty, great idea. Plus, I still want to learn updates and discuss a little gold. Yeah, I want to talk about that gold company too. I've got the research here. It doesn't look like my investor is going to come through. I'm not predicting the future. I could be wrong, but I haven't heard from him in a few weeks, so I have to guess that he's no longer interested. I don't know for sure, and I'm not making a judgment on it, but I have to assume he's no longer interested. But we'll see how it plays out. I'm not prejudging that. But here's how I see that. Um, possibly playing out. For about a year, somewhat over a year, I've been keeping the company apprised of when I thought we'd have a chance to fund that project. And of course, they're keen to know. Like I say, I don't think it's likely that the funding I've been waiting for is going to come through, which is a shame. It's a shame for us, but it's also a shame for that investor. But I can't change that. So you just got to go with how things are. It's not closed. It's not closed to him, but anyway, you just, you know, I think my belief in Railtown, I think possibly, again, I can't speak for somebody, has come across to him as somewhat just this shy of unhinged. But anyway, Babcock family, just on the ounces of gold discovered. Now, discovered, it'll have to be redone for any major company to come in. But as gold approaches 5,000 and goes to 10,000, monies are going to come in. They've already started coming into Barrick and Newmont and other gold companies. They'll come down to the Alamis Golds, and they're in all the royalty companies already, but they'll come down to the second tier, third tier, fourth tier, and they'll come to this company. The company you invested in, and I'm an investor in, has no production. But approximately 15 years ago, basically 2008, maybe 2009, a lot of investors came in. They were very wealthy guys from LA, some New York, Boston, a couple out of Texas, but they're very wealthy guys. But all now in their mid 80s, if not in the home. And not all of them, but quite a few were well beyond they're well beyond the point that they're going to put up any more money. But anyway, I believe they raised about 40 million. I could be wrong, but something like that. I confuse it. There's a sister company, so the numbers, it's been a while since I looked at but it's a big number that they raised, and they put the project together. They built a plant, and they brought in a third party firm to dig. This is all a resource at ground level. You don't have to dig mines. It's just there. It's sand, basically. It's sand, clay, and brine. And anyway, they brought them in to do a third-party analysis, and they drilled sonic drill holes and then processed some of the material using a caustic fusion assay. That's what I remember the name of it is. Anyway, using that sort of off-the-shelf, almost brutal methodology, they recovered They recovered 0.038 ounces per ton, 0.038 per ton, and they came up with 6,600,000 ounces of gold proven. Now, I don't think that data will stand up. They'll have to redo it. But that was third party, and that was proven. The current cost, or the most recent cost that I remember of recovering gold, is around anywhere from $800 to $1,200 an ounce. If you call it 1,500, at $4,500 an ounce in price, if this cost, getting it this way, is $1,500 an ounce, you make a $3,000 profit per ounce. Well, based on these numbers, just taking these two numbers, I mean, it's a big number. Just on that small amount, that implies $20 billion, 19.8. $20 billion in profit to develop that resource. 20 billion. Now, just down the rail line highway is Gold Strike, which is the joint operation between Barrick Gold and Newmont Mining. Newmont found a similar play like this. This is slightly different. Everyone has different characteristics. But a nano gold, invisible gold play called the Carlin, C-A-R-L-I-N trend. And no one believed it. The white-haired geologist didn't believe it. But I believe this Dr. Gill, who I believe taught at my school, went ahead with a budget and did it anyway, and it proved up, and it turned Newmont into a giant. And in fact, I think Nevada still is our largest gold producer in the United States. I hesitate because maybe Alaska's catching up, but all from the Carlin trend. Now, the reason I go through that is the Carlin trend, they process this gold strike in these huge autoclaves. They do this same method or similar. They recover 0.033 ounces of gold per ton of material. 0.033. So they'd be a natural buyer of the company even as it is. Of course, they'd have to come in. They'd have to hear the story. No one's told them the story. They'd have to hear it. They'd have to come look. They do their own testing. And I'm sure they have many other projects on their leaderboard, But it's a natural. It's a natural. Well, anyway, the reason the company isn't doing that is that the guy that founded the company, and frankly has been funding the company the last few years, but I think he's at the limit that his wife will allow him to spend. And he owns the majority of the company. He's come up with two methods which recover over 0.2 ounces of gold. So this number goes just this area would go from 6,600,000 ounces of gold to potentially essentially 35 million ounces of gold, 35 million. That's the story in a nutshell. That's what the money's for. It's already worth a lot of money at sort of standard measures of the gold. It's still invisible gold, nano gold, but a natural buyer would be Newmont or Barrick or both. But the whole point of raising this money is to run material. I think it's 24,000 tons a day, but I don't think it's 24 million. I think it's 24,000 tons a day um, through a pilot plant. And then you get the gold, you weigh it, and you do it over and over again. And then it becomes just a huge upside. So anyway, it's really exciting, and I think you've heard that part of the story before. They did raise, outside of the money we put up, they raised another $1 million. So it isn't dead in the water, and they have enough money to get through the end of the summer or the end of the year. But I think what's going to happen is as we come around the beginning of the new year, there's one guy waiting very opportunistically to just pounce on the company and take it for, he'll put up all the money. He'll pay for everything. He'll fund everything, and he's already had his team study it, and he believes in it. But he'll essentially take over the company. And his last proposal limited our upside to 20 cents a share. We'd still have the risk, of course, because there's always risk. But probably this time he would come in, although who knows, maybe it's just as bad as that. But he might come in this time. That's what was discussed a year ago. He would pay for everything, and then we'd be capped out at a 40-cent per share return. Well, at that $20 billion number that I just showed you, if you assume ultimately there's 1 billion shares outstanding, that's a $20 target on the company per share. It'd be a shame to be capped out at 40 cents. On the other hand, that's 10 times our money. And with the warrants, it's kind of 20 times our money. So that's probably what's going to happen next year, unless we can raise some money. And so a second strategy I've already reached out. There's one investor of ours who I don't think I'll have that much luck, but he's a Middle Eastern billionaire, really wealthy guy, who's put half of his assets in gold worldwide. He's done it for the last 10 or 15 years. Anyway, he has an office on, I think it's Brompton Road, Old Brompton Road, in London, with a British guy running it. And I'm going to next week reach out to him and see. I don't think I'll get anywhere, but I'll try as a sort of a Hail Mary to see if he'd be interested. He loves gold, and $5 million would probably have the potential to be worth. Whew, it's a big number. Billions of dollars, 20 billion. If they prove up this extra gold, it could be worth 10 or 15, 20 billion dollars. It's a big number. So I'm going to try that, but I don't think it'll go anywhere, but I will try it. And then the only other thing I can think of, Mr. Babcock family, is if we as a group, if anyone's still interested in adding to that position, we raise a little bit of money so I can go to the company and say, hey, we've got another 25 grand, got another 50 grand, got another 100 grand, whatever it is. Perhaps I can do it through the vehicle that we set up and then engage, using that vehicle, engage the company in waiting until our Railtown investment works out, so that collectively, I mean, if Railtown works and we still have most of the shares, we could have $100 million, more than that, if it goes really high. So maybe we could fund it as a group through this company that the investors set up with me. And, we, under the terms of the deal, we include him in it, obviously, because that's the agreement. I wouldn't want to cut him out at all. But there might be a way that we could take on that load of that company. My original goal was to pair the investment in the gold company with an investment in silver, identical amount, 5 million of each. And obviously right now the 5 million in silver would be worth 15 million. And the investment in the gold company would be more than paid for. But the money never arrived. And I don't know that we'd have to play that by ear. I'm not sure I would. I would hedge the investment, but silver has a chance at $75. It may do what I'm saying, go to 125, 150, but it also may sell off. It's going to be very volatile, so it might double from here. But when silver was $25, that was the easiest call on the planet. Now it may require waiting. And as long as people have that in their mind, it'll be okay. But silver could be volatile. It could be like Railtown. You could get into silver at $75, $80. And yes, it might go to 100, but it could pull back all the way to $40. And you're going to be, oh, William doesn't know what he's talking about. Should have listened to Tony. Tony said it's speculative and diversify and all the other inanities that you can read in a brochure when you go into Fidelity. From $25, there was very little chance for it to collapse. But, that's just where we are. We have to do it from where we are. But it might be a thing where we could do that. We could put up the money through this vehicle in Ireland and maybe put up some money for silver. Silver might be volatile first, and we'd have to live with that volatility. But I think silver will go to $500 a share over this next run. $500 an ounce. So if we did it through this vehicle, we could also pay everybody out their original monies put in at some point. My caution is where a year ago I would have projected silver going from 20, 25, 30 to $50, 60, 75, maybe $100 in a year's time frame, year and a half time frame. Silver at 75 certainly may go to 125, 150 in the next 6 months. But I think it's going to be really volatile, and it's manipulated. And there's going to be those periods of times where blowhards like Tony can come and say, I warned you, I warned you, I told you, I told you. Now it's finally pulled back. This crap. I'd be much more impressed with predictions of the future than praise for oneself from the peanut gallery after the fact. Anyway, those are my thoughts on that gold company. I want to see if we can raise a little money for it to keep our hand in. We can use this company we set up or do it individually. Anyway, I'll try to come up with a strategy for that. It's a shame. It would be a shame to have this pirate of a guy come in and cap it at 40 cents, but I guess 40 cents is better than nothing, Is Railtown mooning anytime soon? I don't want you to think about it as mooning. This is not a hot money trade. It's not a stock to get in and out of. It's going to be counterintuitive. But as Railtown goes up, if Railtown goes up to, let's say, $8, $10, $12, people will say, oh, take your profit. Can't go broke taking your profit. That's, like all bumper stickers, they have some truth to it. But if you get out, let's say at $8, congratulating yourself, and you go over to GMC because Roaring Tiger is saying you have to be in again. After you do that for Ray and mistrade it and give up, you come back to Railtown. Railtown may be at $15, $20 when you come back. Or maybe you kept your cash at 8 and you timed it just exactly correctly because you followed Tony the Tiger's stock chart calls, because he's really good at that. And you got out at 8 and it pulled back to, I don't know, 6 or 550. And what's weird is maybe not at that price range, but let's say you got out at 15 and tried to get back in at 10. At some time when you try that game, believe it or not, what you're going to find is you can't buy back your position. And of course, Tony's sidekick, the Platinum Blonde, will say, oh, that doesn't make sense. You can buy it, you can sell it, you can buy it back. And Tony will answer, yeah, right. Well, the dynamic that goes on in Railtown right now as an over-the-counter stock under $5, under the uh, uh, goofy eyeballs of Chuck E. Cheese Crawwell, is that there's high frequency trading, it's sell programs, it's ever downward, and everything we've bought has been given to us by these sell programs in the United States. And those, they're not really shares. They're called securities entitlements. And they're just a vague entry of a claim on a pool of stock. But in essence, what Wall Street has done has turned our securities markets into fractional reserve securities markets. And when we go to buy down here, they just print an almost unlimited number of shares under the Reg Show exemption, and they may be using derivatives tied to the Canadian market. I don't know what their system is. But when the buyers come in, because there's no buyers, there's no Mavericks Ventures, there's no Omers, there's dozens of Canadian funds that would buy. There's no Fidelity AI Trust. There's no buyers right now. We do, but those big buyers that will come buy 20 million shares, 10 million shares, 5 million shares. And the question is, well, if it's so great, why aren't they doing it now? It's against the law. Well, if it were, they'd do it. They'd front run it. That's just, it's not true. There are those momentum chasers sometimes, but these people want to buy 5% of the company, 10 million shares. They're going to buy it and put it away in their portfolio. Well, when they do, that's the problem. Those shares will come off the market. As the stock price goes up, the stock maybe even goes on different exchanges. The mimeographing, the Xeroxing, the exemptions under Reg Show, the sales will go from millions of shares maybe to 10,000 a day. When you're $15, you don't need to sell 1 million shares to make your grand a day, cheating the markets. So the price will be higher, but the amount of shares you can buy will be fewer. It's counterintuitive, but I think that's what's going to happen. So I don't think you should be thinking about it mooning, because when it goes up, I don't think you should be getting out. That's one reason. The second reason is this is a stock you may be making fun of. I don't know, JT Wise Co. But this is a stock people haven't heard of. But if Microsoft were to buy the company, you get your bump up to whatever they pay for it. Let's say they pay $21 a share. I have no idea. But you get Microsoft stock. You get that move from here at 29 cents. Let's say they pay $29. You get it from 29 cents to $29 in Microsoft stock. I'm making it up. I'm not projecting that. But that entire move would be tax deferred. You wouldn't have to pay taxes as long as you didn't sell the Microsoft stock. So that's your second reason not to sell the stock in, as you call it, a moon. I'm not interested in Railtown mooning, but I do think there's a chance that TELUS will turn on, so to speak, turn on the machines in January, February, March. And Railtown's application or what tool layers right on top. And so TELUS will be going to their customers already hooked up to TELUS by computer. And so it becomes, I assume, a situation where you go to the website, open your account, and you click Wimuski Data Center, and a screen comes up. And of course, you've got to agree to it, but you pick your ADK provider. That's rail engine, rail tracks, and conductor. You pick that. It's the only, I think it's going to be the only one available. And that doesn't mean if you're a developer, you can't use Google or you can't use LangChain or you can't use somebody else. But to go through the TELUS data center, I believe it's just that Railtown layer. So you click on that. And then below it is the large language model. I don't think that's the developer's choice. I think that's TELUS's choice, but I could be wrong. I imagine it'll be whatever those three choices were, OpenAI, Anthropic, or Cohere. But I think TELUS will pick that. Anyway, you're the TELUS customer, and you're choosing to move from wherever you are, your AI processing, over to the TELUS data center. You just click, boom, boom, boom. And Railtown's set up to scale massively, vertically. Railtown can scale, go from 0 to 1 million to 10 million in 48 hours. Railtown can. And behind that, the NVIDIA double stacked or whatever backup with the NVIDIA state-of-the-art chips, they're ready to ramp up. So I think you're going to see revenues, as you put it, moon very quickly. I don't know if we'll know about it. It may take until May 15th news release that we know the hard numbers. But I think research analysts will know about it. I think Microsoft will know about it. TELUS will know about it. And possibly NVIDIA will know about it. Those are three buyers of Railtown. So yeah, I think things can get exciting very quickly. But I'm not looking for Railtown to, as you put it, moon. I think the revenues are going to explode out of the gate with scaling. And I just wonder how long Microsoft is going to wait before they buy it, or NVIDIA, or TELUS, or Constellation Software. My guess is they're not going to wait very long, which actually is a negative because I think they'll offer a lower price than some of these higher valuations. But it's a positive too, because if the markets are going to crash, let's say in October, September, I don't know, at some unexpected point, the ability of a Microsoft or a NVIDIA to survive as a solid company is much greater than an unknown name. Perhaps. So, there's good and bads. Hey, Pat, I hope you had a very nice Christmas. Thank you, Pat. Don't let the riffraff get you down. Yeah, I get, I hope you had a nice Christmas. I went to mass, and that's about it. Christmas Day, and but it was very nice. And then Friday, I had dinner with my sister. She ate all the chocolate um, pudding, which I never have, but last night I wanted to have it, or half of it, but I didn't have any of it. That's all right. It was very nice, nice place. And then today I saw my brother and sister, and my sister, and that was great. Um, so yeah, I hope you had a Merry Christmas. It was nice, but I do get down because um, uh, I'm not an introvert, so my energy level goes down when I just sit here by myself. I like interacting with people. On the other hand, I don't always like. There's a lot of people I don't like. Um, but yeah, I appreciate that you say that because I absorb a lot of that negativeness, even though I shouldn't. I don't have I don't have scales, thick. Anyway, I absorb a lot of it, and it doesn't always make me feel good. And so I appreciate that very much, Pat. What's the silver trade going to do to the market, David Hensley? Well, silver could go out of control. I mean, it's very hard to predict for sure, but and I've stopped reading everything because it breaks my heart that I missed the trade so far. But I know the basics of it, and in China, India, and other parts of the world, Russia has made silver part of its central bank reserves. But other parts of the world, silver is rapidly becoming the poor man's gold. And now that it's broken through $52, everybody's talking about it. I used to talk about it the last 10, 15 years, and people would just look at me like I had three heads. But now everybody's going to be talking. Everybody's going to know the story. So I think let me tell you what's ultimately going to happen with silver and the market. Ultimately, silver is going to be unobtainable, certainly at these prices, but almost at any price up to some really high number. Silver and the miners in general, worldwide, the money hasn't gone into mines and into new mines. There are no silver resources that you can just go to and start ramping up production massively to fix the situation. Of course, silver is going to come into the market out of Mexico, out of Peru, out of probably China, out of the United States. Silver is produced every time you produce industrial metals or gold. It comes out. Typically, it's viewed almost as a waste product. Well, as the price comes out, a lot of that's going to enter the production stream. But there's a long lead time. I think it's going to be 5-10 years before production will equalize with demand. And where's the demand for silver coming? War, medicine, data centers, computers, phones. we've just gone for the last 40 years in this Reagan uh, banking financialization of everything to the Bill Clinton just-in-time delivery, and somehow we let our institutes of higher learning convince us that economics works, that if you can think about it, we can solve the problem. But economics doesn't solve the problem of supply. You can solve the problem of supply of securities by just, like Bill Clinton did, creating securities entitlements, and you just multiply the number of shares out there. So they're just data entries. But you can't create ounces of silver. You can't create barrels of oil. You just can't do it. Economists are wrong. But anyway, eventually what's going to happen, David, is silver is going to fail for delivery on the London Metals Exchange or on the COMEX. They're going to shut down trading, and they're going to call a force majeure, and they'll settle the contracts in currency. And when the markets open back up, I don't know if they have limit up anymore, but silver will go limit up for the next month. Everybody will be buying it. So there, at some point in the future, silver is going to go out of control because the futures markets break down. In the silver market, there's 26 cowboys, men, that trade the silver market, the precious metal markets, particularly silver, the futures markets. They will sell in 5 minutes the entire market's production for a year. And of course, there's people out there that will say, well, silver's priced where it should be. I don't get this thinking. But I guess what they mean is you have to take into account that the market's corrupt. But it works as long as those paper markets can suppress the price, and then nobody stands for delivery. They just roll their trades over. It works. And as some people believe, the silver market's too small. They're not going to invest in it. They get it entirely back assward because silver, probably as much as oxygen and sunlight and oil, insulin is a need. And all other things, except maybe oxygen and water, are a want. But silver is a crucial ingredient of our modern society. Without silver, our industrial society would collapse. I think that's true of oil and natural gas. It's probably true of other metals, perhaps copper, but it is definitely true of silver. It's not so true of gold. Gold doesn't have that criticality to our industrial life and to our health. So anyway, silver, there is annual demand for silver, and there's annual production. Right now, as I'm talking to you, and I could be stood to be told I'm wrong, I think it's 800 million ounces are produced a year. I could be wrong on that number. And I think that's roughly what was available in the warehouses in London and in COMEX. But I don't think there's anywhere near that 800 million anymore. I think it's down to 200, 300 million. And like I say, I haven't read because it breaks my heart I'm not in the trade. Because it's just something I have believed in. But remember, those manipulators are still there. And silver is the Achilles heel of our financial system. It too has been over collateralized. And China and these other countries are moving the physical eastward to Asia, gold and silver and other things. And they will develop, and they're doing it now. And believe it or not, they will have a physical market, not these corrupt paper markets that we have. Of course, human beings, whether they're Chinese or European, ultimately get greedy. So decades from now, if China is the world's superpower and financial power, their trading markets will get corrupt too. But right now, the price for silver, the price for gold is set in the paper markets, and they're totally corrupt markets. China, to me, still hasn't shown a willingness to go to war with the United States. China has a debt problem, massive. China wants her currency low. I believe China has a population problem. But who knows? But I also believe China probably has as much as, try to do the arithmetic, as much as 4 times the reserves of gold as the United States. Their population owns gold. China wants a seat at the next Bretton Woods. Russia has gold and silver. Russia's in great shape. China's now trading oil for gold with Saudi Arabia. They have vaults set up where they just move the gold from a vault for China to a vault for the kingdom. I suppose back again if the kingdom wants to buy something from China. But what I don't know, and I sense we're close, but I don't think we're there yet. But there's a lot of emotion out there, and there's starting to be a lot of panic. But I do not believe China owns as much gold as she wants to yet. So I think she's allowing this system to go on, even though the news is saying it's going to stop, and the predictors are saying it's going to stop. But at some point, I'm going to be wrong, and China decides, okay, we've had enough. Let's let gold find its own value. What is gold's value? I think gold's value, according to Jim Rickards, in the last book that he published, or the last one I read, he might have a new one. I think it was, Well, he had a $10,000 target, then he had a $20,000 target, and he did a complicated analysis based on, I think, 20% gold as a reserve. I have the book here somewhere, or not, maybe we can talk about it again. Dr. Stephen Lieb had a target of 40,000, but I bet he's raised that by now. Who knows? But gold is going to find a different level. Part of it will be wealth creation. The rest will be wealth preservation. But if you pick a number, I don't know, 20,000 dollars an ounce, maybe more. Silver's price historically has been 1 ounce of gold to 15 and a half, 16 ounces of silver. So if I can't do it in my head, but if gold went to 20,000 an ounce, silver could be $1,250 an ounce. And I think that's coming, but I don't think China's ready for it yet. But they're getting close. In the meantime, these cowboys paper trade silver, and they do it with the bank's blessings. They do it with the government's blessing, and they probably do it with the Fed's blessing. And when the market goes up and then I think crashes, the shorting will come in and the selling of paper silver will come in, and that's the volatility. So I'm not sure we're through with all of that. But my point is, eventually, silver is going to be unobtainable. The futures markets are going to be in crisis, and silver is going to go through the bloody roof. And it's going to take a high price for China and Russia and India to sell silver back into the system. And I think it could take 5 to 10 years to get some sort of equilibrium. And in that time frame, the miners and people that own physical silver are at first going to get wealthy, and then they're just going to preserve their standing. I think the silver trade, as you put it, in the next 6 months, probably, nothing can be guaranteed, of course, but I think silver is going to go up just like gold is going to go up, just like everything's going to go up for the next 6 to 9 months. We've had a bit of a run, so at any point, everything can pull back. But I think the silver trade will not interfere with the market right now. But I do think as we come around to the new year, you're going to see wealth advisors, venture capitalists, ETFs, retirement plans, research analysts. Everybody's going to be talking about gold and silver. And the miners are already way up, and they're going to go higher while you wait for money to be released. It's painful. It's painful. But what do I think it'll do to I don't think it'll have any negative effect on the market in the next 6 months or so, with the caveat that if there's ever a failure of delivery on the futures market, which could happen at any time, silver could cause a collapse of at least one or two of the bullion banks. And my favorite to go down would be Bank of America. And my second favorite is JP Morgan, although I think they've hedged now. But a big bank will go down and the market will be destroyed. Will recover, but it won't be pretty. And I think, David, you're touching on the core of what's really going on in the world right now. There's Russia, China, and the United States, basically. I mean, there'll be Brazil, there'll be Nigeria, Saudi Arabia, India, there'll be other countries. But right now, it's the United States, Russia, and China. And further, it's the Western banking system against Putin and his alternatives, which the Victoria Nulands and the Hillary Clintons and I forget that guy, Blinkens of the world drove him to. But they're building alternatives. They're not ready yet. But it's about the world's collateral. It's about the banking system, the banksters. That's why they sit in Donald Trump's inner circle. That's why they own Congress. And that's the battle that's going on. And so I don't think the United States is going to let the silver markets destroy the banking system without calling out all stops. But at some point it'll fail. So anyway, this very long answer, if I had to guess, the next 6 or 9 months, silver will go up. It'll be volatile. I think silver will go to $150. And what a trade. What a bloody trade. That would have paid for risks in so many other investments. But cash is king. It's always good to have cash as king. You're going to start, David, and the rest of the Western world will too. You're going to start measuring your wealth in gold and silver and platinum and other precious metals. And you're not going to want to own the currency. Currently, less than 0.5% of Western investable assets are in gold and silver. Less than 0.5%. If one billionaire decided to bring her portfolio to 10% silver, the thing would run riot. And that's what'll change. That might change sooner than we think, but what'll change over this next cycle is if we go to 5% of our assets in silver and gold in the West. There's not enough gold and silver in the West. Price fixes everything. Time and price fix everything, but it'll be disruptive. So the silver trade, I think, has broken out, obviously. As I warned everyone, it's going to be headlines everywhere. But I don't think they're going to let it go out of control yet. And I think they're going to find an ally in that with China. But I could be wrong. I could be wishful thinking. What if silver does go out of control, which could happen at any delivery? I think you're going to have a market crash and banks go under. You'll have major banks cease to be. And you'll wake up in a new world. I just don't think we're quite there yet. I think that's a long way off, like a year. But if you read some of the headlines now, which I try not to read at all because I'm not in the position, um, those scary things could happen at any time. Silver and gold is moving to the east, and it's not coming back. And if Elon Musk needs a lot of silver to build his new rockets, and he puts in orders on the futures markets to buy silver, and then instead of rolling his order stands for delivery and it fails, our Western banking system collapses. So that's eventually what's going to happen. Snoopy, what are your thoughts on the stock market and the banks right now feeling pressure over rising silver price? I guess I kind of talked like that about that. I think JP Morgan hedged. I read that JP Morgan has built a long position in silver. So JP Morgan, ironically, at least part of JP Morgan may be okay. But JP Morgan is where that woman, I forgot her name right now. I can see her face. Anyway, she was out of London and she first came up with the idea of basically the derivatives market and the extension of the paper market. Blythe Masterson, or Blythe Masters. Anyway, J.P. Morgan was the bank most at risk, so I don't know if that's still true. I think if the stock market accelerates to the upside, it will take pressure off of the silver market. But there's no question now, and this is what annoys me. Particularly with one or two people, I was telling them this, we got to buy it, because no one was paying attention. Now everybody is going to pay attention. It's just, that's life. you miss things. It's like Railtown. When it's down, um, people, the negativos look smart, I guess. And maybe they are, maybe it'll stay down. But I think what's coming to the stock market you've never seen before, and you won't ever see it again. I think the stock market's going to go up like the most unbelievable thing you've ever seen. And everyone's going to get bullish. Everybody, your broker, your shoe shine boy, everybody. And I think we're going to want to buy puts on stocks when it's up there, long term, like a year out, buy puts on the banks. Because when it comes down, I think it's going to be swift. I don't know that it'll stay down all that long because the Fed and the governments will come in to rescue everything. And I think we'll have one more delusion, mass delusion or illusion, and it'll recover one more time. But at some point, the United States has to get back to a real economy, building things, making things, and by that time, when it becomes a battle over resources, I think that's why Trump is trying to secure South America, Central America, Greenland, Canada. I think that's why he's talking that way, is because he knows, and I'm sure it's not just he, but he knows what's coming ahead is going to be uh, a worldwide struggle for resources, and the banks and the markets will reflect that. So I guess, Snoopy, I'd say in the next 6 months, 9 months, I don't think it's going to mean much, but it could. Silver will destroy banks if it gets out of control. But I think they'll control it a little bit longer. We'll find out. But eventually, one of the reasons I think the stock market will collapse so much is you'll see the Western banking system give up the ghost. Ward Richardson did some research on revenue share structure. Typical models split revenues from joint offerings. A startup might receive 20 to 40%. Wow. But they have to share that, I guess, with whoever gives the LLM. Those are big numbers, 20 to 40%. Jack Hamilton, as always, Mr. William, thank you for your time and effort. I'm just catching up after a good day of fishing. That sounds fun. I hope all is well with you and the RT gang. That sounds fun to go out fishing. Look forward to next year. Yep, I do too. TELUS RT context. 64 telco startups, variations in incentives, bundled services. Startup get a percentage of upsell revenue, 15 to 30% on premium tiers. I like that 15 to 30% range because it seems more reasonable. I tend to think 30% is too high, but maybe not. I also tend to think 15% is too low, but maybe not. So I don't know, 20%. By the way, rail engine. Yeah, rail engine is the key. I was reviewing one of the reasons I started talking about getting excited about the AI 2.0, so to speak, is the Morgan Stanley analysts focus on robotics and how robotics are going to take over everything. And that is rail engine. That is rail engine. Ward Richardson, Adam, clap, clap. Ward Richardson, Jack Hamilton, so am I for the new year. By the way, rail engine, formerly Donna. Happy, good evening to everybody. Giuseppe, when Samsung's car battery is ready, that charges in 10 minutes, has a 20-year lifespan, improves safety, 635 ounces of silver per battery. There isn't enough silver. There isn't enough silver for that, Giuseppe. There isn't enough silver for that. There just isn't. Unless the price goes so much higher. That's amazing. That's amazing. What will that do to the silver? Well, my projection, I think silver is going to go definitely going to go one ounce of gold to 16 ounces of silver. I think that's in the bag. But I actually think it's going to exceed 1-for-1. In other words, I think the price of silver at some point in the precious metals rally, and everything is cyclical, I think silver will be priced higher than gold. Of course, I don't own any silver. It's human psychology. I'm telling you, whenever prices are down, the doom and gloom and the people don't act. They don't act. Oh, that must be telling us there's something wrong. Oh, what you got to do is understand the story and come up with a value that's correct, or as close to correct as you can think of. And then that gives you a chance to build a position. That's like Railtown, that's like silver. And it's going to be oil and gas. But I wish I had resources. I really do. I'd already be building something and inviting you all in on it. But I don't even have the resources to make sure this bloody thing stays on next month. It's just frustrating. Anyway, let's not think of it. We are where we are. A lot of Canadians are selling their RVs because a dollar Canadian cost $1.50 US. Yeah, so they bought them in Canada and they're selling them down in Florida. I would just get out of everything you don't want while there's cash. Put it in silver at any price. You know what's going to happen with silver? You're not going to measure. You're going to cease measuring for some period of time. You're going to cease measuring your wealth in dollars. I've got $150,000 at the bank, or I've got $1 million at the bank. You're going to stop that. Or I've got $50 million that the government's going to give me, or whatever the number is, some massive number. You're going to stop seeing it that way. You're going to start saying, I own a ton of silver. I own 10,000 ounces of silver. Or I own, you're going to start measuring, for a while anyway, your wealth that way. And the thing that interrupted it was Bitcoin and those kind of things. I think there's a place for it, but let's see how those behave in a crash. Silver will come back maybe to $42 or $50 when the market crashes from wherever it is. I mean, if silver is about 150, I don't think it's going to come down to $42, come down to 100. But let's see what Bitcoin does. Silver will come down and then go back up as the Fed prints money and as governments print money. Then you're in the wealth preservation stage. Now is the wealth creation stage for silver. And it's been that way. And I know there's some people out there who are skeptical. Oh, it's such a small market. Well, it's about to get a lot bigger. There are 12,000 operation data centers globally, and 4,000 to 6,000 more in progress globally. I downloaded that myself somewhere, and I saw you got it. Let me give you, Ward, my amateur insight on that. If you want really good due diligence on this point, please turn to Tony. He'll check a chart. But all of those data centers, every single one, needs to be upgraded. Every single one. But they'll start with the new ones. And of course, technology could change. You could have a breakthrough in processing or a new chip, or put your data centers on the moon. Who knows? But for the time being, for the foreseeable future, every single one of those has to be upgraded. Ward Richardson, Giuseppe, silver is in high demand in the AI industry. It's superior electrical and thermal cutting. Yes, exactly. Justin Babish, did we notice that on Friday there was only ever 5,000 shares offered on either side of the spread other than the normal? Yeah, I saw that 50,000 that's ever there. Yeah, I saw very little volume on Friday. And Justin, I just showed you the chart, but I think you've seen the lows in Railtown. And of course, you got to give credit to Tony. He called that last week, that it's finally in a buying range. Do you think we would have been able to buy 17 million shares last week? I doubt it. You can never buy the exact bottom. Anyone that tells you you can is trying to make a different point. Ward Richardson, William, that was a very good question on your research, and you got fantastic results. Yeah, the point you made up there, to me, Ward, just to break Railtown to one story, the only story, is TELUS. Nothing else. Just TELUS. Because TELUS, can you imagine all these startups are trying to prove the concept and generate revenue? TELUS is like going to the top of the mountain and coming down the Black Diamond, or it's going to the Olympic swimming pool and diving in the deep end. And I'm not talking about risk. I'm talking about let's get to the business end of this proposition straight away. They're going from startup into massive revenue as their first customer. Now, again, it's what you project. It doesn't have to happen right away. But the thing that came across to me in my conversation, my chat, is that Railtown will scale and NVIDIA chips will scale. That data center will scale. You can go, you're going to have like a J curve or whatever you call it. You're going to go from whenever TELUS starts their campaign, and I'm sure it'll be a campaign, and you get something in your bill or you get a bleep bleep, probably AI generated on your phone, switch over here, here's $50, or here's a ticket to the World Curling International Championship in Toronto. If you move, they can go from 0 customers to 1 million in a day, or a bar. And imagine what that does to the story of Railtown. Imagine what that does. That's one data center. One data center. Of course, there's a backup they have, and then there's going to be 2 more. So TELUS has 4 data centers. But those first 2 are ready to go. They start with the 1, there's a backup. And I suppose you could come up with a whole different technology for chips and make data centers obsolete, but we're not there right now. And I don't see any evidence that we're going to be there in 5 or 10 years. So, Ward, just imagine one data center, or maybe 2, is worth, let's say, in 2 years, there's $2 billion in revenue running through it, but we don't know how it's split up. So let's call it $1 billion in shared revenue with Railtown. And I mean, your numbers are maybe higher, but let's use 20% of $1 billion. That's 200 million. If an analyst can project 200 million, what multiple do you put on it? And to go back to what I did before, if you do $1 billion in 2 years shared revenue, and you estimate Railtown, one estimates Railtown gets 20% of that, and you assume that the AI network goes over with over 100 million at 20%, that's 20 million, maybe 25 million. You've got 225 million in nearly 100% revenue projected in 2 years. And you've only got 220 million shares outstanding, 222 million shares fully diluted. That's a bloody dollar a share in cash flow in 2 years out of the gate. You don't think that's going to get a multiple? That's why I get so agitated sometimes that this very bad advice comes out. I don't think you should be patient, diversified, in the speculative bucket. Waiting 2 years, wait till revenue comes out, wait for my next chat, my next breezy chat with the CEO. I think now it's time to be radical about Railtown. I wish I had money next week. I'd buy the hell out of it. And I'm trying to, but I can't. I'm barely staying afloat. That'll change. I'm not complaining. It's just a period of time. Ward, $1 a share in revenue or cash flow, if I'm right. I mean, maybe I'm wrong. Maybe AIP isn't doing 120 million in hosting spend that's going to be transferred to TELUS. Of course, Dr. Tom Core talked about it in his interview, and we've seen other evidence. And maybe the chairman of TELUS wasn't telling the truth, and he doesn't know his own customers when he said he's going to grow AI revenue to 2 billion by 2028, 2 years. Maybe that's just all wrong. But I think you'd really have to be negative, and you'd really have to be a pessimist, and you'd really have to see bad, and then you don't invest, and that's fair enough. That's fair enough. But I think the story is so simple, because when you combined the third quarter earnings call, which the transcript is there, you can get it, it's in black and white, where they mention Railtown, and you have the data center that was set up earlier this year. And I just read you an article from Finwit that they've run it through the paces with 3 other companies. And we're coming into a new year. And it seems to me we're waiting for TELUS to just say go. I don't know when. Obviously, it's not going to be next week, and it may not be the following week. Is it going to be January? I think so, but maybe it's February. Who knows? But once it happens, the revenue, you're sitting there with, Entwistle is saying 2 billion by 2028, and AIP for 125 companies is doing over 100 million. They have 200 companies, so you could guess 200 million there. And Entwistle, you're talking about one data center, but as growth comes, once you get there, you start talking about future growth. You prove up these two concepts, and of course, you've got Uniserve. That's two data centers. Ward, look at your number worldwide. You start projecting that, and you have, I mean, you start arguing that Railtown should be a unicorn and be on its own. But I think they'll be bought out. I think we'll be bought out. Hey, Red Pepperoni, how was your Christmas break? It was good. I'm reading this book. It's actually pretty. I'm able to concentrate, which I haven't been able to do for a while, so it's good. Ward Richardson, 7 trillion smackers. That is great. Yeah, we don't know how it all breaks out. But Ward, what it means to me, which I think is your point as well, regardless of the naysayers, regardless of our own, me too, our own lack of understanding or our own worries, bills to pay, whatever, life, this transformation is going to happen. Now, it may fail, just like human endeavors around the world in history sometimes have failed. But basically, as it was explained to me, and we can all remember, the PC changed our world. And that started, I guess, in the 80s, and maybe it was earlier, but that's when I remember it. And the PC, all that software was written. What is that? That's 40 years of software? All written using SDKs, software developer kits. All of that either has to be renewed, replaced, upgraded using AI developer kits. It's huge. It's just huge. And the second transformation was the internet. You know, everything went up and then it blew it. But out of that, out of the first, you got Microsoft and Apple. Out of the second, you got those two, and you got Amazon and Oracle and Facebook and you know, OnlyFans, key critical component to empowering women worldwide, the great end result of feminism. The third change is this AI 2.0 or this AI for everyone. I think there's a fourth one, but man, it's all I can do to kind of understand a little bit of this. But I think quantum computing is going to come, and quantum computing is going to be gigantic as well. But first things first, AI for everyone, or AI 2.0, it's not only the real-time decision making that you might need in a portfolio platform or in maybe customer service even. But it's also robotics, self-driving cars, drones, all of that. War, it'll be there for war. Ward, I don't think it's going to stop. I don't know why people feel like it's going to stop. Um, this amount of money is headed this way. And Railtown is just in the crest of that wave. It's a big wave to catch. And it's big enough for Langchain, Railtown, uh, Google ADK, and there's several others. But the only one I know of who has a pole position in Canada and has, I, I don't even think it's preeminent. I mean, it is preeminent, but I think it's the only, I don't think it's the best position at TELUS's data center. I get the impression it's the only position at TELUS's data center. And if Railtown is able to, let's say TELUS gets started in the first quarter, gentlemen, start your engines, and then they start accepting customers, and Railtown's able to ramp up and generate that revenue, which somebody said, and I don't think it's a secret. I don't think it's a secret. It'll be paid monthly. That's what I remember hearing. I don't think he gave me that as a secret. Doesn't matter, monthly or quarterly. That money's going to come in, and Railtown is going to be able to accelerate the development of its AI and its marketing. They're going to have so much cash flow and probably financing opportunities as well. I mean, it's just gigantic, and that's from one or two data centers. Imagine if they just simply go in every Canadian data center with Bell Atlantic, whatever it is, Bell Canada. And imagine if Microsoft says, we don't want to lose Canada, so let's make a deal with TELUS. We only have to honor it until they become our 51st state, and then we'll just treat it like any other deal. No, I'm kidding. It's a huge story. It's a huge story. And I guess, Ward, that wave of money is coming. And every data center needs the GPU, they need the computer power, but they need the large language models, and then on top, they need the ADKs. And guess who's the ADKs of that's I think Railtown's going to blow Langchain out of the I'm trying to remember the one of the articles I read called it the gold standard, Langchain. I think Railtown's going to become the gold standard, at least for data centers. And why not sell to data centers? Somebody else can sell to people at home. Justin, I think when you monetize, you might get YouTube. All going to push. Because there's something in it for them. It's very good. Very good. Very good. I like the cut of your jib. I like the cut of your jib. RLAIF holding. Yeah, you might get a chance to put, how much can you put in January? 8,000 or something? You might get your chance. RT has 2 data centers out of the way and 12,000 more to go. Exactly. And imagine, Ward, that story. Now, of course, LangChain will get involved and maybe some of these others and Google. But you know what? I don't know if I wrote it down. Let me make sure. I asked him, because he showed me this chart. I don't know I don't know if I wrote that chart down, but it showed that uh, maybe I did put it here. It showed that, for example, um, Amazon down at the hyperscale level went up to the large language model level with OpenAI, one of those, and then it went up to the ADK level because they had an arrangement with LangChain. But I asked him, and he said that's not exclusive. That's not exclusive. And I asked him, to my memory, look, he told me that Microsoft paid $10 billion to buy GitHub. IBM paid $11 billion to buy this other thing. It's not hard to perceive that it could be a big number here. It may not happen. Anyway, I asked him, does Microsoft have the LLM and the ADK? And I think they bought this one little company when I Googled it for 21 million or something. And he said, no, they don't have it. So Google has something, soup to nuts, obviously. Amazon is linked up with either OpenAI or Anthropic or something for the large language model. And then they go up to LangChain for the ADK, although it's not exclusive. And then there's Microsoft sitting as a hyperscaler, and they don't have that. They're not developing it internally. And Railtown's embedded in their GitHub and their DevOps. Just seems so obvious to me that Microsoft is going to buy Railtown. It just seems so obvious. But don't listen to me. Check with Tony. He's much more reasonable. And his due diligence. Gotta trust it. Gotta trust it. All right. There's more. Ward sent me some things I was going to read, but I'm tired now. So maybe I'll do it tomorrow or Monday. And you know what? I don't feel as negative now that I spoke with you. So thank you. I really didn't think that I was ever going to do a YouTube again. I really didn't. And I was certainly going to wait until after the new year. But we'll try to have some strategies on making money. And the one I can think of as a New Year's resolution is sell all your shit and turn it into silver, physical silver, or gold or platinum, or something else that or get rid of your debt, just sell crap before it becomes worthless. Ward Richardson, you hit the nail right on the head. I forget which one, but apparently startups here want to prove their concept, and the ones that get the most value are the ones that can monetize the quickest. And you could argue that it's taken Railtown 6 years, but in terms of the market awareness of Railtown, it's going to be instantaneous that they start generating revenue. From a market awareness standpoint, people now know LangChain, but there's no, I mean, there was one article, right? Two articles I read to you. And there's one vague research report, newish, that I read to you. But there's no awareness of Railtown out there on the street. And that goes back to my point that I don't think the stock price is where it should be. But I might be misunderstanding the meaning of that point, because maybe the point is that if the research is not there, and the buyers aren't there, and the corruption of selling is there, maybe that's what that point is. But man, it gives us a chance to buy it. And just like silver, I don't have the capital to buy it. The developer took 600 grand out of my house in a flip. Anyway, I wish I had that money. Hey, Justin, thank you very much. Thank you for your super sticker. It's super. Well, I don't have anything more to say, I don't think. Tonight. Except I do suggest to you, let's just look at the chart one more time, and then I'll sign off. Let's just look at the chart one more time. I think you saw the lows, and I think they were trying to get out of their position. But there's no guarantee this is the low. There's no guarantee. You could see Monday, Tuesday, and Wednesday they try it again. But the closest picture is this trade here in May. But doesn't mean it will happen that way, but it could. And that means by the time Donna's buying the stock in January, it might be 37 cents, 40 cents. That's all right. So I think your chance to add to your positions Monday, Tuesday, and Wednesday as the year-end selling continues, tax loss selling. I think it'll give you a chance to buy. This is an awful last 6 months, there's no question. And I had a friend get very nervous about it here in this range, maybe a little higher, right around there. And he was right as a short term. But markets don't go straight up. They just don't. All right, Donna, good night, everyone. And good night. That's good. Peace to everyone. Merry Christmas. Merry Christmas, everybody. And we'll talk maybe tomorrow. I don't know about tomorrow, but who knows? I may wait till the new year, but whenever. We'll talk as soon as it's good to do so. So peace to everyone. And thanks for listening.